Hello again, everyone. This is Ken Kibler, Director of Training and Client Business Support for eTruckBiz. We just hit the top of the hour, so the attendee list is continuing to grow. If everybody could sit tight for a minute before we start the weekly business update. Thank you very much. All righty, it looks like the attendee list has leveled off. I want to thank everybody for joining us today. Once again, I'm Ken Kibler, Director of Training and Client Business Support. We will be going through the weekly update with some of the same old topics as well as some new, hopefully very interesting stuff. As always, if you have any questions, please put them in the Q&A or the chat. And without further ado, I'll turn this over to Jeff Walzak.
Okay, thank you, Ken. As always, we need to remind you that eTruckBiz is not endorsed, sponsored, or anything else by FedEx Corporation. And before we get started again today, we're gonna have Becca tell us about the BGSS, I think.
Yes, thank you. Yeah, last week we discussed how the FedEx stock is at an all-time high, but the service providers are still dealing with thinning margins. So even though the brand is having financial success, you as a contractor are facing many challenges and maybe wondering how to fix this, which we can help with. So we've been here, most of us at eTruckBiz have worked in the FedEx space for quite some time. Some of us as many as 35 years, believe it or not. And so we understand the challenges that you're facing. We've seen it before. We've seen ways to go about it and make changes that really matter the most. So especially with me talking to service providers every day, it seems as though everyone has their own issues or problems being in different areas and whatnot, but at the same time, it's all very similar. You guys all are doing the same thing and have the same problems that we've seen many, many times over and over. And we can give you that solution to fix it and move forward and make some changes. Now, the eTruckBiz business growth and support system is going to be a more effective and efficient use of your resources to handle the non-revenue producing activities so that you can focus your time on revenue producing activity instead. So you don't need to build all of your own business support functions. You can just use our standardized ones cheaper than it would cost to build your own. And this is basically just teams and helpful support to get you to where you need to be for your business. So your business transformed. You'll notice the change once you start implementing our programs and really start to feel in control of your business as time goes on. And in fact, people will probably start asking you, what you did or how are you making the changes? The BGSS is one of the ways that really can transform everything to get you to where you need to be. Yes, thank you. Yeah, so basically our goal is to get what you wanted out of this business in the first place. And generally, you guys all have the same goals. You want your freedom, you want a significant income, but you also want that growing asset value. And this business we can provide that just for you as long as we are making the necessary changes and really focusing on what it takes to get there. So the business growth and support system, we have the admin IQ, budget IQ, and performance IQ. This is the big part of the solution. It's truly an ecosystem designed specifically for the FedEx environment. So we know what it takes. We know how to get you there. I would love to talk with you if you have questions or anything about each program individually. There's a lot that goes into each one. You would have your own point of contact signing up. So there's just too much information to honestly give right now, but I would love to set up something one-on-one and go over any questions with you and see how it could help your business.
Last week, pickup stops. While the pickup stops on the vans looked pretty good last week. Actually, from where it was, it kind of went up a little bit above the trend line and nearing where we were last year at this time. So that's pretty good. Packages up a little bit on the vans too, but the delivery volume was a stinker. That's for sure. So, and that's really tough with the stops and packages being like that for Valentine's Week. Valentine's Week traditionally has been a pretty good volume week, but I don't think I've ever seen that, Ken, in all these years. I don't think I remember volume going down for.
No, it's normally a mini peak, and it was more than a peak.
Yeah. And actually, it's a little worse than that, 7% down from where we were last week. So that's not good. And so we want to make it up in productivity, and no, we
Oh,
took a dive. Now, if I'm you, I'm going to say, well, I had to put the capacity on to handle Valentine's week. Well, maybe you did, but it's going to reflect in our financial results.
you're not going to see much more volume unless something's out of the regular until till Easter. So if you didn't cut back enough last week, I would strongly encourage you to start cutting back now. Look at the historical projections. As you can see, we're running below last year's volume levels, so you're going to need to adjust accordingly.
Okay, so let's look at some news items. So one of the first things we'll look at here is that stock price is still it's at or near a high. Actually, FedEx stock reaches all-time high of $380. I don't think that was today. I think it was a day or two or something ago. But the question is why? And we're going to go through a whole bunch of different things that happened at Investor Day. But the reason the stock price is up huge, and that's no joke, it's 30, 40%, or just depends on what time frame you want to look at. It's up big. Why? And the simple answer is they're making their business more profitable. That's really what it comes down to. That's what the point of putting the operations together and everything else everybody talks about all the time. It's all about trying to make the business more profitable. Now you can do this too, and that's what the BGSS, what Becca was trying to tell you to begin with, is all about. Anyway, let's move on to some other stuff here. So FedEx Corporation hosted its 2026 Investor Day last week, and the main headline there, FedEx introduces key strategic initiatives supporting the company's vision of making supply chains smarter for everyone. It targets earnings growth and margin expansion, which, by the way, that's the biggest contractor challenge, is increasing our margins, and adjusted free cash flow through 2029. So they took this particular opportunity to use some projections and make them go through 29. Now, see, they announced that it's 2026 Investor Day, the company's strategy to strengthen its position as a leading industrial network that powers the global economy. Looking ahead, this is real important. FedEx is prioritizing premium growth in high margin verticals, scaling its digital and AI capabilities and further transforming its network to drive significant profit improvement and stockholder value creation. So what they mean by high margin verticals, they're talking about deliveries that they can charge a premium for. For an example, pharmaceuticals, right? That is UPS's, that's their bread and butter, pharmaceuticals, health industry kind of stuff. They can charge a fortune for that stuff because it's high value, needs to be time definite, that kind of thing. So guess what they're going to do? They're going to go after UPS's bread and butter, right? So here are some of the highlights from Investor Day that are of concern to service providers. So some of the key elements of FedEx's transformation include unifying FedEx's different service lines into a single integrated powerhouse, harnessing AI and digital technologies to optimize operations and enhance customer experiences. So anyways, this strategic update will have significant implications for FedEx's service provider partners. The goal is to create a more seamless, intelligent supply chain that benefits FedEx and its broader ecosystem of customers and collaborators. So currently, about 25% of the network has been what they call optimized. Optimized is putting the express into the ground operation. And that 25% represents about 360 of the stations across the country, and 200, approximately 200, well, more than 200 Mostly express stations, but some ground stations have been closed already, right? So what they say, they've been realized because of this so far, they've realized a 10% P&D cost reduction in the markets serviced by the optimized volume. Why the stock price took off is there was a few things, but one of the reasons the stock price took off is because they're going to take a much more aggressive approach to integration. So the accelerated push is by the end, I believe this is for 26, the end of calendar year, right now, end of calendar year 26, they want to have 65% of the volume in the optimized network. That means more than 900 stations are gonna be integrated by the end, well, in this case, by the end of 27, which is another aggressive goal. They're going to close more than 475 stations, and it's about 30% of the network. 30% of the stations are supposedly going to close. Okay. They think they're going to save a lot of money. We're going to talk about some other things here, but the bottom line here is this is a very aggressive, relative to what they've done so far, is a very aggressive move. Okay, so those of you on here that haven't, a lot of you have been told when it's going to happen. No, it's going to be the fall or spring of next year, something like that. There's a lot of stations going to optimize. Okay, that's no joke anymore. So FedEx's strategic business priorities are focused on two key areas: premium services and AI innovation. We already said that. In the premium services area, they are prioritizing high margin verticals like healthcare, which is what we just said. The automotive industry, they want to get more aggressive in the automotive industry and the aerospace industry. These sectors offer strong growth potential and higher profit margins, right? Now, why would you want to deliver boxes with higher profit margins, Ken?
Well, the higher profit margins means you're collecting more revenue and you're not paying out at the same rate that you'd pay at ground. And your competition, UPS, claims that they're shredding their lower profit margin business.
But don't they have a little problem?
UPS, absolutely. They've got a union problem and a wage problem.
Right. So delivering high margin packages seems to be the answer to paying high dollar Teamster salaries, right? What happens if that business starts eroding?
If that business erodes, then they're going to have to fill the bucket back up, and it would be lower margins, and then their labor as a percent of revenue would be out of whack, which so many CSPs have seen with their model in the past. So their model is not sustainable with low margin packages.
Bingo. That's a big deal. If you can read between the lines there, that's if they go after and get some of that business, that's going to be big trouble for UPS. So anyways, on the AI innovation front, they're embedding AI into 50% of their core workflows by 2028. This will enable predictive maintenance and real-time disruption resolution, boosting operational efficiency and responsiveness. The combination of premium services and AI-powered workflows will be a powerful force multiplier driving growth and profitability for the business.
Predictive maintenance is a big issue that does affect the CSPs and may not even realize it because you're saying, well, I own my own equipment. How are they going to help me? Well, all those trailers, those late breakdowns that cause sorts to run late and cause you to be waiting on loads, it definitely impacts there. And definitely in the hub network, that's running 7 days a week. It makes it very difficult to do preventive maintenance. So this predictive maintenance will definitely help the hub network as well.
So another thing they emphasized on Investor Day was they want to be a big player in optimized returns by small to medium businesses by developing best-in-class return solutions. Now, I think a lot of you guys that have been around a long time know what we mean by returns. What do we mean by returns, Ken?
Basically, something is delivered to a store or a consumer and it's the wrong order. How do I get it back to the original shipper and done efficiently? So
So,
it's a great way to
right.
balance a network.
Well, there's that. Yeah, that's one of the things, but it's also what's the other magic thing about returns? So, if you why does FedEx love bulk stops?
Because it increases the number of packages per stop. And if everybody looks at their settlement, they get paid a lot more for a stop than they do a package.
Right, but at a stop with lots of boxes at it, you only pay if you took, let's say there's 10 boxes, and that could represent 10 stops. So you'd have the cost for the stop in the package at each one of those stops, right? But what if
Yep.
I took those 10 packages to one stop?
And I'm only paying for 15
One,
cents per package and
one
business
stop,
stop probably about 225. So,
right? One stop, right?
yep.
So the yield, if you want to look at it from a stop standpoint, that's the way to do it, especially if you're getting full price or something close to full price to go to that one stop. It's free money. So, anyways, that's the thing behind returns. That's why they want to get really, really good at returns. They want to help people figure out how to get returns back to wherever they're going because it's very, very profitable business. So, they also want to leverage industry-leading rural coverage to grow the SMB market. There's something called FedEx DataWorks, which is a digital intelligence platform that enables predictive routing and load optimization, real-time visibility into weather impacts, advanced lane performance forecasting. So that's about balancing empties and whatnot, especially on the line haul side of things. They have a guy that's the senior vice president of data. They're going to start selling data. They're going to start selling, let's say, the predictions about the economy to people like Dun and Bradstreet or whoever wants to buy that. Because where can you tell if the economy is doing well or not?
Transportation industry.
And specifically, FedEx UPS, because those FedEx UPS touched the most number of businesses everywhere. So volume's up, economy's going up. Volume's down, economy's not doing so hot, right? But that information there is value to that. So we'll see. They didn't get into the weeds about how that's going, but part of what they think they can sell in the future is data about all the things going on in the network, which is I thought was interesting. There's something called Tricolor. So the Tricolor Air Network is a three-tier system that optimizes density, speed, and cost efficiency across global routes. The purple, orange, and white tail aircraft are strategically deployed to match demand and operational requirements. This tiered network approach allows them to provide the right level of service and cost structure for each market and customer segment. On the technology front, they are driving 50% reduction in their application footprint by 2029. So they're taking planes out. This involves standardizing their processes and simplifying the digital tools used by service providers. The goal is to create a more streamlined, efficient technology stack that supports their air operations more efficiently. But one of the things they were talking about, which is interesting, is they think they have enough data on packages to, let's say you're shipping something from Miami to Portland, let's say. And if you put that something on an airplane in Miami and fly it all the way to Portland, Oregon, there's a cost for that package, right? It's the cost of flying that airplane and the fuel and everything else. And I don't know what the cost is, but I do know it's a ton cheaper to truck that from Miami to Portland than it is to fly it. So one of the things they were talking about, the whole tricolor thing, is maybe you fly that package from Miami to Memphis, take it out of an airplane, put it on a truck it to Seattle, I don't know, someplace, some intermediary hub or something, and then put it back on another airplane going into, let's say, Portland, Oregon. The combination of flying and ground transportation saves a whole lot of money. That's how they can take some planes out of the air, right? So there's that initiative. That's some interesting stuff there.
And who just went from surface operations, who's also now in charge of the air operations.
Are you asking me? Because I don't know.
Isn't that what Scott Ray just got promoted to?
Oh, maybe something like that. Yes, sir. Anyway, I thought that was interesting. It's, again, not necessarily, unless you're a line haul guy, you'd want to see this. Now, if something like that were to happen, that's going to be probably more frequent line haul trips between different hubs for sure. So that's good for service providers. Now, they're buying something called InPost, which basically are automated parcel lockers. It is a major innovation in the last mile delivery industry, especially in Europe. That's where they're at, in Europe, within the InPost network. So what these are lockers that provide flexible of home delivery options for customers. And then the question we would have is, a similar model to this going to come to North America? FedEx is spinning off its freight less than truckload business, allowing it to focus on its core integrated package network. I don't think we said that yet. That's the whole thing. They claim that focusing on the package industry, package business is going to make them more efficient. These strategic moves will enable FedEx to be more nimble and responsive in a rapidly evolving e-commerce delivery landscape. So, what did we say about returns? It's better to deliver lots of packages to one place than it is to deliver lots of packages to lots of different places, right? Guess what these lockers do? Pull up to the locker and you put a bunch of packages in one place. You're going to pay, are these all going to be separate stops by sticking the boxes in the little slots? I don't think so.
I think UPS has experimented with these on college campuses as well.
But anyway, they spent a lot of money. It's something like $9 billion on this company. So we'll see. Maybe that has something going forward as well. We'll see. So there's something very clear here to know or to think about. The future of FedEx is about returns. The future of FedEx is about returning money on the investment made. Now, not just network expansion. So way back to the RPS days and even FedEx way back then, everybody was concerned about covering the entire United States was one thing, building density, the D word. But everything up until recently has really been about expanding the networks, especially on the FedEx side, right? More and more and more. Well, guess what's happening? They're closing down buildings, right? So it's not necessarily more anymore. It's about the return on investment. Was probably one of the key takeaways from the Investor Day presentation was they're really going to focus on returning money to the shareholders. And there you go. Ground operations are transforming fundamentally as 2.0 phases move more rapidly. That's why they did 2.0 to build the return on the investment. Service providers must be comfortable with sweeping operational changes to succeed. The operational landscape will become more predictable, standardized, and efficient due to increased technology. Integration of new systems and processes will accelerate, requiring service providers to adapt quickly. Those unwilling or unable to adapt in this tech-enabled environment will struggle to remain contracted. The integration chaos of Network 2.0 clears. FedEx's focus is shifting dramatically, as we just said, to return on investment. They're going to quit expanding and make some money now. As the expansion phase subsides, FedEx will pivot its attention back to superior service standards. And why, right? Premium verticals will demand excellence in service quality. So if you don't get your pair of shoes today, Ken, is it okay if you get them tomorrow?
Yeah, they'll work. I just won't walk as far today.
Well, what if you don't get your
Pacemaker?
yeah, or something, the battery, I don't know, you don't get your pharmaceuticals, you don't get your pills. It's kind of a different thing, right?
Yep.
So we can't not do that. Those kinds of they're gonna focus more on that type of business. That's what we mean by the verticals. So they're gonna have to return back to excellence in service quality. Retaining superior service provider partners is becoming critical as they're now seen as key assets. If quality is what they're searching for, and if that means you have to stabilize the contractor turnover and quality issue, this could ultimately result in improving settlement rates, which would be used as a key retention tool for key high-performing service providers. Does that make sense?
Absolutely. Need
I
to
think
start to reward the people who are doing the job right, delivering on time, and as I said, doing it right, especially as you get into the medical and the pharmaceuticals. Image also becomes very, very important.
so. Why do we think that they're gonna? I don't know if rewards are right word. I think they're gonna have to. You get what you pay for sometimes, and
Properly compensate.
there, there you go. Properly compensate for what they're gonna need to do, right? So if we go back to 2022, I think it was. Does anybody remember when FedEx announced the Network 2.0 and the Drive initiative? But if you guys remember, those of you, a lot of you around here, you've been around a long time. If you remember, we started doing some Network 2.0 presentations, what it was going to mean. And some of you might recall that back in 22, we told you what was going to happen. And for the most part, it has happened. We knew, well, back in those days, people say, well, why are they combining the networks? That doesn't necessarily make any sense. Why would you? I mean, you've been doing this forever the way you're doing it. Why would you combine them? But we knew back then that combining the networks would create. So we also said in those presentations that I didn't want to put all those slides up there, but Fred Smith knew that if FedEx were to combine the operational efficiency like UPS with the low cost service provider capability. Ken, do you remember these slides?
I do. Absolutely.
You could create the world's largest and most profitable transportation company.
And that's been a goal of Fred. It was a goal of Fred's for a long time.
So usually back in those days, we asked you, do you want to go for this ride? Right? Well, here's the thing. If you're on this call right now, it's a little too late if you want to go on this ride. You're already on it. And now capable service providers who can handle the complexity of 2.0, there's still a lot of chaos. We're going to go through 6, 9 year of more integration, but good contractors. Now, here's our prediction. They're going to have to start paying to keep good contractors around. Let's just put it that way. They always wanted to, but they had to go through this whole, and they're still going to go through some stuff, but they had to go through the chaos, we'll call it, or the bumpy road to get here so that they can create not only the most profitable transportation company, but if FedEx starts getting into some of those very high yielding packages that UPS enjoys right now, UPS is going to be in trouble. And many would say they already are. Ken, Does anybody have any questions or comments?
Doesn't look like we have any questions. I want to kind of reiterate what Jeff said. You're along for the ride. Network 2.0 will offer some new challenges to you. No matter how prepared you think you are, and you can prepare, it's still going to change the culture in your company. So if you can start to change the culture now, start to manage by the hour, not by the day. Start talking about your drivers doing shift work, not a per day work, because all of that comes into play. I know some of our best customers, even when Network 2.0 came in to their world, it rocked them a little bit and it took them a little while to get back up to speed. So start to prepare now because, as Jeff said, you're already along for the ride. So a lot of information about FedEx, and you're with a visionary company, no doubt about it, and positioned much better than UPS because has to go after that high margin business. As I said, if they only had low margin business and they had to pay top dollar wages, they're in big trouble. FedEx has got a strategy to go after what UPS has to keep. So you're along for the ride. It doesn't look like we got any questions. We will be back here again next Tuesday. If you come up with any questions, please don't hesitate to reach out to us. But if we don't talk to you before next Tuesday, please have a safe and profitable week. Thank you very much.